Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we transition into June here, we're now almost halfway through the year. We're 6 months into the commodity super cycle. We took the opportunity again last week to book further profits, banking 3,300 points profit with our members at the Gold and Silver Club. So of course, for every 10 lots that you'd be trading, that's $330,000 of profit, and for every one lot that you'd be trading, that's $33,000 of profit. Many of our members over the course of this year have generated 6 and 7 figure returns. And of course, last week we also saw a great opportunity towards the end of the week to build further positions across the industrial metals with the sell-offs that we had on copper, on platinum, on gold and silver, which then catapulted higher on Friday after the non-farm payroll data. Last week, the US employment data missed expectations for the second straight month. Non-farm payroll data, that increased only 559,000 over May versus a forecast for 650,000. Infrastructure spending, massive stimulus, rapidly surging inflation, these are the major themes at the moment that are dominating the market and really shaping the trading landscape. In the first 5 months of the year, the US has now only added 2.1 million jobs. That leaves over 7.6 million American workers still unemployed. So far this year, Federal Reserve officials, they've remained adamant that improvements in the labour market will be a key factor they will consider when deciding on tapering their quantitative easing program, as well as raising interest rates. Now, Friday's data confirms that the Federal Reserve, they will continue to maintain their ultra-loose monetary policy for as long as it takes the economy to reach maximum employment, which could still be a long while off. Looking ahead this week, the biggest market-moving events traders will be watching very closely will be the US consumer price inflation data. US inflation is expected to rise further, with the headline year-on-year figure to be 4.7% compared to 4.2% in April. In addition, the core inflation rate is expected to hit 3.2% in May versus 3% in April. The former would mark the highest inflation reading since 2008, when oil prices surged to $150 a barrel, while for the core rate, it would be the biggest annual rise since 1993. Both figures are expected to be much higher than the Fed would like. That further confirms fear that the cost of living, it continues to surge at an alarming pace, whilst the labour market remains weak and wage growth stagnant. Federal Reserve officials, they've continued to state that inflation will run hotter than its traditional 2% goal for a longer period than estimated as the global economy reopens, but should prove temporary. However, traders, they're unconvinced and they're questioning whether the Fed has unleashed a beast here that they can no longer control. So far this year, commodities have firmly positioned themselves as one of the best asset classes of 2021, with a total of 21 commodities ranging from metals to energies to softs, racking up double to triple digit gains. There are plenty of reasons why commodities are on the move, but the key driver is rising inflation, which has spurred significant demand for assets with inflation hedging capabilities. One of the key indicators of rising inflation is higher oil prices, and last week oil prices, they surged to their highest level since October of 2018. Crude oil prices are up 275% from this time a year ago. Extraordinary times, they do create extraordinary opportunities, and right now as traders, we are living in some of the most rewarding times ever in history. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. Firstly, moving over to copper here, we took the opportunity ahead of Friday's non-farm payroll to build further positions on the sell-off that we saw at the end of last week. In fact, the sell-off that we saw on Thursday and on Friday before non-farm payrolls enabled us a perfect opportunity to build further positions on that dip. All of those trades for ourselves and our members of the Gold and Silver Club moved immediately into profit after Friday's non-farm payroll data and indeed closed significantly up. So we're looking quite strong here on copper as we go into a new week. What I would look out for is the fact that, of course, copper broke out to all-time highs as we moved into the month of May. We benefited massively off those breakouts to the upside. We've still got lower entries that we built into over March and April, but we do continue to add to this position. Of course, fundamentally, we've got all of the infrastructure spending to come as well. The overall positioning from hedge funds and money managers remain supportive to this market. And of course, we have the big push towards electric vehicles and green energy, which is going to be a benefit to silver here as well, which closed up 1.28% on the day on Friday. As you know, we've continued to build silver positions this whole way along through March, through April, through May. Nothing has changed here. We continue to do the same on Thursday through to Friday. We added on the dip, got a great entry there on the sell-off that we had on Thursday that moved immediately into profit after Friday's non-farm payroll. Nice, decent pop to the upside. I hope many of you capitalized on that sell-off that we saw at the end of the week. We talked you through this on Silver Asset of the Day last week, that these pullbacks are great buying opportunities at the moment. Nothing has changed here. We very simply want to be buying into the dips, continuing to build our position. Silver is a great market to trade at the moment. Of course, no commodity will go up in a straight line, and when it zigzags, you want to take advantage of these sell-offs where many traders, they do tend to get liquidated. They can't handle the volatility. That's particularly the case with gold here, which is why you need to be utilizing data, market intelligence, and understand the bigger positioning here and the bigger picture in the market, particularly as we get towards Basel III. So hedge funds and money managers, they've increased their net longs significantly in this market over the last 2 months here. You can see even on Friday, gold was up over 1%. It was a great opportunity to buy the dip as we did on Thursday with the magnitude of a sell-off, and then we've seen a complete reversal there on Friday, which gave us an opportunity again to build another position on the dip, on the sell-off. Nothing has changed here. We want to continue to stack into pullbacks on the metals, particularly as we get closer to the Basel III regulation at the end of June, where gold will become a tier 1 asset. So this will be very important catalyst at the end of the month. You've got many traders just using outdated technical strategies out there, gimmicky indicators, and they constantly get chopped up in the market. Gold was another great example of that. Lots of traders getting liquidated on the sell-off, only to then see gold surge on Friday. Then let's move it over to platinum. So I would keep an eye on this as well going into next week. Typically, platinum is under pressure over May and into June, and then picks up momentum certainly as we go into July and August. We've got this firmly on the radar. We've already built positions in this market, particularly going back to March, which have been favorable to bank profits into strength along the way. We're looking to add further trades to this market as we go through the month of June and into July. This is on the radar as we progress throughout this week and throughout the rest of June. As we mentioned previously, palladium was a great trade for us last week. We banked 3,300 points. We've still got exposure on palladium here, rallied very fast in our direction in the matter of 1 week. It generated a lot of profit for us and our members at the Gold and Silver Club. We remain long this position and very simply looking at more upside as we progress throughout the summer here. Very simply, this is another industrial metal that will certainly benefit from the infrastructure spending, the big push towards green energies and electric vehicles. This is where you really want to capitalize on the dips that we've had recently. No market goes up in a straight line, they will zigzag, and this is where you need to be utilizing a lot more data, market intelligence, precision in the market, so that you're not constantly getting chopped up like most of the retail market out there. This is where a research-driven approach will help you massively, trading the same way that professionals do, not getting taught elementary, basic technical analysis, which everybody is taught out there. The most simple and basic type of trading you could possibly do, and it gives you no edge at all, and you will just end up losing a lot of money, and we definitely do not want that for you. We want you to be successful when you're trading the commodity markets. As you know, we're going through a period of exponential change. Infrastructure spending, massive stimulus, rapidly surging inflation, all of these are the major themes in the markets right now that will dominate the trading landscape. This is where you have an opportunity to maximize it. If 2020 taught us anything, it's that you should never rely on just one income stream, and building multiple income streams is no longer an option. It's a priority to make yourself recession proof. Right now, as we're in a low interest rate, high inflationary environment combined with higher than usual volatility, this is here to stay. And the low interest rates mixed with surging inflation, that's a lethal cocktail that's guaranteed to erode the value of your investment returns if all you do is buy and hold in this market. So don't get lazy letting inflation devalue the money that you've worked hard for. Always make your money work hard for you as you've worked hard for it. So configuring your trading approach correctly to the current market conditions, it's not an option but a necessity. If you want to thrive and not just survive in this new trading paradigm, then you need to adapt your approach to the current economic landscape and build your portfolio around high income generating strategies designed to capitalize on the short-term macro-driven opportunities. You need to trade like the hedge funds, money managers, institutions, utilizing a professional, research-driven approach. Having access to the right data at the right time is extremely important. The greater your data and intelligence, the greater your edge in navigating these markets with precision, accuracy, and the highest levels of profitability. So with that, if you would like to learn the research-driven approach to the market, join our community of successful traders and join the professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to our real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.